what is a 1031 exchange? I'm Mike. This is Mondays with Mike. And that's a question that I don't actually get that often in the form of a question. I do pretty often get people who think that they're doing a 1031 or that their property qualifies, and it really doesn't. So the first thing that I want to set straight is that 1031, also known as a like-kind exchange, by the way. 1031 just refers to the IRS code for this provision. It only applies to commercial or business property. So it's real estate that is income producing. It is not your primary residence, and it's not a vacation home that you just have as a second home but isn't rented out. All right. It applies to other things too, but this show is focused on real estate, obviously. What you often confuse it with, if you're someone who's selling your primary residence, is Section 121 of the U.S. Code, which allows you to really be exempt from, if you're an individual, $250,000 in capital gains on the sale, or if you're married, $500,000 of capital gains. So that's a different thing that applies to your primary residence. 1031 just applies to commercial or investment property. All right. The other myth is that you just don't have to pay taxes when you sell. It's not that the taxes aren't due, it's just that they're deferred. They're not due right now. They'll be due when you sell the replacement property, unless you do another 1031 exchange. So you're getting the time value of the money that you save in taxes. You can buy more property if you don't have to pay your capital gains, right? You have more to roll in. And it's the government's way of keeping you in the real estate business. There are a lot of tax incentives to own real estate in the U.S. You have to follow the rules, though. And there aren't that many rules. I mean, you definitely want to use a qualified intermediary, which is usually a lawyer or a title company, to make sure you're following the rules and you get the benefits. But they're strictly following basically three rules. One of them we've talked about, that it's got to be like-kind investment property. So it doesn't have to be, if you have a single family home, for example, that's rented out, it qualifies. You don't have to buy another single family home. You can buy actually multiple properties, or you can buy another property that is income producing. Could be a whole apartment building that you're applying it to. Maybe it's an office building. Maybe it's retail. Like-kind is broad enough that it covers other investment real estate if you're selling investment real estate. The other key rule, now we have two timing rules. One of them is within 45 days of the closing of the sale of your property, you have to identify, you can identify a few properties, but you have to identify the properties that you're going to roll your gains into, that you're going to buy as replacement property. So you just have to identify them in 45 days. And then once you've identified them, you have 180 days measured from the time of the sale of your property to actually close on it. So you have about 6 months to close on it, but only 45 days to identify it. If you miss those deadlines, you won't get the benefits of the 1031. So you have to really be careful with time here. It is of the essence, as real estate lawyers like to say. So what's one solution if you're running low on time? I mean, this episode and series is not just for people who aren't sure if they qualify or not. This is also for you investors out there watching, who may or may not know that you have an option at the last minute. If you really want to get the deferral and you want the 1031 to apply, there's something called the Delaware Statutory Trust, which is very similar to a real estate investment trust. It allows you to buy shares in an entity that owns like-kind real estate. So you're really buying like stock instead of brick and mortar real estate, but it will qualify, at least under the current rules. And there are specialists who handle this. Happy to make connections with qualified intermediaries, someone who does a DST, as it's called. We have a pretty deep Rolodex, dating myself a little bit with that reference, but I think you guys know what we mean. This is just to cover the basics, and the basics can change. They're always looking at this in Congress, and most recently the Biden administration in their, the American Families Plan, it's called, that's being debated by Congress for upwards of a year, but it's hotly debated because they're talking about capping the amount of gains that you can defer tax on. They haven't done it yet, but we're keeping an eye on that, and we'll do a follow-up episode if that ends up happening. So that's it. trying to keep it pretty short. I did pretty well, under 5 minutes. Now I'm going over. I'm going to leave it there. Hope everybody's summer is off to a great start. If you have questions about this or about real estate in general, we love to hear from you. If you're watching it on social, direct message us. If you're getting this in email, you probably know how to get us by cell, but you can always email us back also. All right, everyone take care, and we'll see you later this month.